So the website that I use is finviz.com. So I go to finviz.com. I click on screener. Average volume, so I want it over 1 million shares traded per day. Relative volume, I want it over 1. And then price is over $10. I only trade stocks that are over $10. Then one thing that I've tweaked a little bit that kind of narrows down the amount of stocks that it gives me, I go over to technical because it gives me better results and it's less stocks that I have to look through. So I go over to technical, then 50-day moving average, and then I put above 50-day moving average, and then I go over to the 200 price above the 200 moving average. Okay, so that gives me about 8 pages to look through. It's really not that much at all. So now, before I get to that, I'll show you guys what I'm looking for exactly. So what I'm looking for is a stock to be, obviously they're going to be on an uptrend because they're above the 50 and the 200. So the stock's going to be moving up. Then I'm looking for sideways consolidation. And then my entry is going to be, let's see here, my entry is going to be above the consolidation. And then what most stocks do after they break over that consolidation is they break through and start heading back up because it's already on an uptrend. Remember, trend is your friend. So above the consolidation, that's where I'll set my buy order, and hopefully I'll be able to get to 3 to 5% out of it. So now that's what I'm looking for, uptrend and consolidation. So I'm looking for at least 2 touches, and it's kind of a flag pattern. So it's up. This is the pull itself, and then this will be the flag, and then you break through the consolidation, and you should be able to get a decent gain out of it. All right, so now let's go back to FinViz. So it gives me with the 8 pages. So now what I do is I just kind of float my mouse over it and see if any of these things meet the criteria. So that's actually an ETF. I don't really swing trade ETFs. Let's see here. Although, so if this was a little bit closer, I would consider something like that. But it's an ETF, and it's looks like it's dual traded too, because it's gaps up and gaps down basically every single day. Let's see here. No. Very close. Very close. I would honestly consider Amazon over $1,000, but that's way too expensive. So you can see it's consolidated sideways for the past couple of months. For the past like 3 months, and it keeps hitting 1,000, and then it keeps getting rejected. So once it breaks $1,000, it's gonna keep going up. ASB. Actually, let me check this one out. So I go to either stockcharts.com or I open up my TD Ameritrade Thinkorswim app. So let's check out ASB. Alright, so ASB, I can tell you that I don't like it because this is like a recent uptrend. It looks like it's been going down for a while, and then it came back up out of nowhere. So this past like 2 weeks is just a recent uptrade, now consolidation. I would consider this, but it's not really perfect. So, and it's also the first page. So I mean, we'll keep it on the back burner. I'll write it down. So ASB. If we don't find anything else, this is a possibility. But let's keep looking. So that's not exactly perfect. All right, so where were we? ASB, ATHM. No. If it was a little bit higher, somewhere around like the $67 mark, where you see that consolidation that's kind of going sideways, but it dropped a little too much, so that's a no. That's looks like it's going to be a nice gap fill, but that's something maybe we'll cover some other time. No. So this is something that you don't want to hop into. This looks exactly like the type of stock that you do not want to hop into, because it jumped straight from $13.50 to $16. when that stock pulls back, you do not know how far it's going to pull back. So what you're looking for with something like this would be the pull section of the flag of something that I'm looking for. So if it started consolidating sideways for like a week or two, and then it started breaking up to the upside, that's what I would be looking for. But this is way too early to get into. This is something you absolutely do not want to get into. Let's keep going. Nope. This is actually kind of a good example. If you see BMI, here, I'll pull it up. Or BMY. Okay, this is actually, yeah, so this is the pull. This is the sideways consolidation. And then it breaks up, consolidated again, and breaks up again. So that this is kind of what we're looking for right here. This area right around here. See, it's above the 50, above the 200. Pull, sideways consolidation, break up, consolidate again, breaks up. But obviously we're already too late. BMY, BOX, it's all over the place. No. Okay, BSX. BSX looks like it has 2 touches, but the very last day, BSX. So the very last day is the highest. All right, so the high is 29.54. The high on this is 29.47. Okay, so if the very last day that it traded is the highest on your current chart, that means that you are late. So do not get into that. You could get into it if you really wanted to, but you're chasing it basically. So now let's go to the next one. Where are we? BMY, BOX. No, that's all over the place. BSX. No, that's. No. No. Nope. Nope. This is another perfect example right here. See the up. See every single up move. It goes up, consolidates, goes up, consolidates, comes up. It's just like a stair stepper. It's just like a set of stairs. That's how a healthy stock moves. Remember that. A healthy stock moves up, consolidates, moves up, consolidates. If it goes straight up, it's going to pull back. And when it does, it's going to pull back hard. Oh, next page. EQT would probably be good, something to watch over 66, but it's probably, I don't know how long that could take. It could be next week, so. ETRF. No. Nope. That's an ETF. Yeah, GM's been doing very well lately, actually. Let's see here. HLF, that had an amazing day last Friday. Look at that, from 68 straight to 75. GPQ. ICE. This is exactly what I mean right here, ICE. Let's look at it right here. This is what I mean by you don't want to get into something that's going straight up with no pullback, because you went from, let's see, 66-ish and went straight up to 71 and it pulled all the way back. So about a third of the move just in one day, it just went straight down. No. Nope. Nope. Close. Definitely that's a no. Key looks good over 19. Probably take a couple of days. I'm gonna write that down though. P over 19. So up move, as you can see, up move, sideways consolidation. Had a red day on Friday, but you can see it's getting rejected multiple times right at that $19 mark. Oh, actually, you know what? I don't like it. Good thing I looked at it. All right, so 200's crossing. Okay, so 200's headed up, but now this is headed down. So the 50. So which means if they're crossing, if the 50's going below the 200, it means it's on a downtrend. Actually, it's exactly like that stock that we looked at earlier, ASB, where it's just looks like it's been on a downtrend and it's just a recent uptrend and consolidation. KeyCorp. Huh, maybe they're related. That's weird. All right, let's keep going. Let's buy out. Nope. LYB does look good. Let's check it out on here. LYB over the highs. That's your entry. The entry would be the highs. So $100.69, 174, 172. So yeah, so it's had two touches right here in the $100 and 70 something range. So the highest one, the highest peak, which would be the break of that, it would be $100.75. So let me write that down. So LYB over 174. Okay, it's up movement, sideways consolidation, and a break of that high. Let's go back. B MDRX. Wow. Okay, this looks really good actually. MDRX. Prime candidate right here. All right, so 14. What's the high on this? 1445. 14. So we've had 3 touches at 1445. Okay, this looks really good actually. 1445. So this looks like the definition of what I was looking for. So 1445. Let me put a star next to that one because that one's really good. There we go. All right, MDRX. This looks very close. Very close, actually. What is this? Auto parts. MTOR. Let's look it up. MTOR. Up, sideways consolidation. High of 27. Let's see here. High of 26.91. I would keep an eye on this over 27.03 right here. It's up movement, sideways consolidation. If it breaks that, it should break out. The only thing that worries me is that it's so far above the 50, and anything. I haven't really covered the RSI for you guys, the relative strength index, but anything, this number right here, anything over 70 is usually overbought. But just because it's already high doesn't mean it can't go higher. And especially in the day trading world, although this is swing trading, especially in the day trading world, we buy stocks high and sell them higher. So remember that. Just because it's high doesn't mean it can't go higher. This is good, but I think MDRX was definitely better. So MTR, let's go back. MTR, nope. This would have been really good, actually. Netflix over 190, whatever that little sticking candle is right there. So it just broke out. That's a textbook cup and handle formation right there. New York Times Company. NYT. This looks pretty good actually. High of $20.11. High of $20.10. It's a 58 on the RSI. NYT. This is weird that their stock is even going up. I don't even know how they're not out of business. Newspaper company. Let's see here. Let me look at the year chart, weekly chart. Actually, this doesn't look bad at all. Should probably be here, $20.15. It's not as good. It's not as good as I like it. Because the next, after it breaks this 2010, 2011, and it's going to break this 2015, which I think it will, but it's a big U formation. I like that it's consolidating right under it, but it's not exactly what we're looking for. So if it's not perfect, then I'm not getting in it. So it does look good, it could succeed, but it is not the pattern we're looking for. Let's see here. Where was I? NYT. Paychex. I'm still waiting for the day to trade the stock. I actually used to work for them. But nope, not this time. Alright, page 6. There we go. No. PPC. Wow. This looks very good. Alright, PPC. This is a lot of consolidation. This is from August, like 22nd or so. It just started going sideways. So right here above 30. Wait, hold on. Let me make sure that's what that is. 30, 2909, 2978. Yeah. Oh yeah. Okay, so PPC over 30 looks very good. PPC over 30. Okay. Yeah, this is almost textbook on this one. So MDRX and PPC are probably the best ones I've found. This has got really good support right at the 50. It's got really good consolidation. It's got a really good break up to the upside. So it's got a lot of good potential. All right, so where were we at? PPC. All right, next is PX. Nope. Nope. So if you guys are following along on the screen, I hope you guys are able to see the little charts that I'm looking at. So you can see that, just maximize it so you can see the whole thing, so you can see what I'm looking at. And you could probably do this over the period of a couple of days, a couple of weeks, and then you'll be able to just scroll through these just as fast. And on a Sunday morning or Sunday afternoon when you're not doing anything, you can do your scans really quickly and then be ready for market open on Monday morning with everything already set. So with this strategy, you can probably spend about an hour, maybe 2 hours tops during the week and be able to make a decent amount of money. STM over 20 looks pretty good, but let's see. Actually, no, I might have 2 touches. It's not perfect, but let's look at it real fast. STM. The only thing that it worries me is that there's a lot of gaps. What is this? STM Microelectronics. I'm not sure why there's probably a heavy traded stock. I'm not really quite sure here. STM. All those gap ups and gap downs kind of sketch me out. Just like they say on Shark Tank, and for that reason, I'm out. So let's go back. STM, STO, STZ. no, no, nope. Look at this consolidation right here. I think Mayer actually called this out for last week. It was TTD over the highs right there. You see it's like a cup and handle. It one touch, two touch, three touch, and then the next one it just broke out. That's what we're looking for right here. TTWO. This looked like some good consolidation. It did exactly the same thing. One touch to actually touch like 4 or 5 times, and then it broke out. Nope. Nope. It's an ETF. Almost looked good there for a second. Nope. 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 All right, last page. No. 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 Nope. Okay. All right. So we got MDRX and PPC. So let's get these right. Okay. All right. So let me set these up. So MDRX. And PPC. So usually what I do is I execute my orders with Colmex, and I use Thinkorswim for charting. They have real-time data, and it's free. So, all right, so MDRX, let's go to this, MDRX over 1445, so let me draw the line right here. All right, so now what we do is we aim to take a 3% profit, 3%, or more. So what I do, there we go, is figure out what 3% of that is. So 45 times 0.03. So it's 43 cents. All right, so 43 cents. Now, I am willing to put $300 on the line saying that I am right. That is the max I am putting that I could lose. So the max that I will lose is $300, which we do is 3%. So if I'm willing to lose $300 to make a 3% gain, we have a 3% max loss. So now, if the stock triggers at 1446, I can only lose, 43 cents. Now, how many shares is that that I would be able to buy? So usually what I would do is let's see here, 0.43, and then I'm sure that there's probably an easier way or some formula, but 215, usually I just kind of figure out kind of fast. So times 700. Okay, so that's $301. So that's close enough. So that means that I would be able to buy 700 shares of MDRX at 1446. So now what I do is I go over to trade MDRX, buy. Let me move this here for you. Now I change this to 700. And I'm doing it on the Thinkorswim platform because a lot of the people that follow me or that swing trade, usually they use this platform. Doesn't mean you have to. It's different on every single platform. I'm going to put the order out on Colmex, but since a lot of you guys don't have it, I'm going to show you guys how to do it on here. So this is a paper trading account. So this is not real money. My real money is in my Colmex account. All right. So 700 shares, MDRX we're going to do a stop order. A stop order is a market order that will be triggered once the price limit is set. So the top is 1445, so you have to wait for that to break. For that to break, it has to hit 1446. So the stop order will be triggered at 1446. Just because it's a stop doesn't mean it's below. You can have a buy stop order. So stop order, and then right here you put GTC, GTC means good till cancel. And if you put it for the day, it will the trigger will only set off if during that day that you put it on. So obviously the market's not open today, so if I put it on only good for today, it wouldn't trigger if it triggered on Wednesday. So what you do is you put it on good till cancel, and then you just hit confirm and send. So then now I have an order down here sitting for 700 shares of MDRX at 1446. And let's see how much. Let's see how much that was. So 14 times 700 shares. So should be around $10,000. Okay, and then you basically do the exact same thing with PPC. So usually I'll take 1 to 2 swing trades a week, depending on which one kind of looks better, or maybe there aren't that many. A lot of the times you'll find maybe 1 or 2. Sometimes you'll find 10. But you have to find kind of dig around to maybe it's not really quite perfect. You want to get into something that gives you the best odds to be able to make your money back and then some. So now let me explain how this works. So after you've chosen the perfect one, let's just say that I chose MDRX for the week for this upcoming Monday. So